Stanbic IBTC money market fund versus equity fund. Which is the best investment for you? When it comes to investing in Stanbic IBTC mutual funds, this Stanbic IBTC is one of the top fund managers in Nigeria. One question keep coming: should I choose the money market fund or the equity fund? Both are great options, but they serve very different types of investors. So in this video, we compare them side by side and also help you decide which one fits your age, risk level, and goals the best. So we are looking at the kind of fund, the kind of mutual funds that fit your age, that fit your risk level. Because in mutual fund, one size doesn't fit all. So if you're a new viewer, you're welcome. This channel is where we discuss investment matters, and I try to explain in the most simple way so all my viewers can understand. Join this community by clicking on the subscribe button. You are welcome. Now let's get into our topic: the Stanbic IBTC money market fund versus the equity fund. Which is best for you? Let's understand the MMF, the money market fund, the Stanbic money market fund. The money market fund is a low risk mutual fund. It has a very low risk that invests mainly in short-term instruments like the treasury bills, the T-bills, the fixed deposits. The main aim of the fund managers in the money market fund is to make sure that your money is safe, your capital is preserved. It is designed to give you steady returns with very low volatility. Well, let's call it a capital preservation method of investing. And the minimum amount you need on the Stanbic IBTC money market fund is just 5,000 naira. So you have no excuse not to invest, because with a minimum of 5,000 naira, you can invest on the Stanbic IBTC money market fund. There is also a current annual return of between 17 to 18%. Even though there are many fund managers that pay more than this percentage, but Stanbic is trusted. You know, Stanbic, this fund manager is actually operated by a bank, a popular bank, the Stanbic IBTC. So for me, I still trust this fund manager. So 17 to 18% current yield. But this yield, this 17 to 18% is not stable. This year, we have seen it's gone up to over 20%, and it has gone down almost down about 17%. So, or even 16%. So it's not really stable. Another good thing about the Stanbic IBTC money market fund is liquidity. What do I mean by liquidity? It means that this fund is liquid. You have access to your money anytime. You can withdraw your money anytime, even though there is an holding period. Holding period means when you deposit your money today to invest on the Stanbic IBTC money market fund, there is a particular holding period when you cannot withdraw your money. You can withdraw it, but there will be some little charges from your interest. So maybe like 1.5% or thereabouts from your interest, not from your capital. And another thing is, it is ideal for people who want safety and stability over big profits. If all you want is, I want my money to be safe, I don't want very big returns, but I just want this my capital, I want it to be preserved and safe, then money market fund is just the best investment for you. Just think of money market fund as a smart savings alternative that actually pays you better interest than your bank account. Okay, let me assume you now understand the Stanbic IBTC money market fund. Then let's talk about the equity fund, the Stanbic IBTC equity fund. You see, this equity fund, on the other hand, invests mostly in stocks of Nigerian companies. So when you hear equity fund, the money here, the funds here, your investment here is invested into stocks, Nigerian stocks, Nigerian company stocks. That means your returns depend on how the stock market performs. If the stock market performs very well, That means your fund here will also perform very well. The potential you have on the equity fund is unlimited. It can go wide. You can make very big returns. Also, the minimum investment here is also 5,000 naira. I keep on wondering when people complain that I can't invest because I don't have money to invest. If you have 5,000 naira, you too can invest in Stanbic IBTC equity fund or even the money market fund. Now let's talk about the risk level of the equity fund. The risk level here is high. I keep on telling you that it is high. It is high because prices can go up and down. And historically, this fund has returned annually about 30 to up to 60%. So up to 60% annually in a year. Now, let's compare it to the money market fund. And look at this now. This one can give you 30 to 60%, because even this year, we have seen it go up to about 40% or even more than this. So that means on the equity mutual funds, you can earn more returns. But don't forget, the risk level is high. It's high. You should understand, because like I said, they invest in stocks. Stocks fluctuate. It can go up and down because of anything, because of economic reason, because of any pronouncement from the government, because of anything can make the stock market to go up or down. So, and that affects the equity fund, because that is where your money is invested into. And this equity fund is ideal for investors who can stay long term and tolerate risk. Just think of this one, the Stanbic IBTC equity fund, as your wealth builder. It is not for emergency money, but for growing your net worth over 5 to 10 years. So historically, equity fund has returned massive gain within that period of 5 to 10 years. So it's not something you put in now and leave. Let me explain. Sometimes when stock market goes down, it can go up again. So many people, when they invest in equity fund and the stock market go down, what they do is you just sell at a loss. No, don't do that. That's not the best way to invest. When it comes down, if you don't remove your money, you stay there, then when the market recovers, your money will also recover and you make massive gains. So if you want to enjoy equity fund, you must stay invested for a longer period. Okay, now let's make comparison between the money market fund and the equity fund to further understand which one is better. Now, let's talk about the risk. For the money market fund, the risk is low, while for the equity fund, the risk is high risk. I've explained why this one has a low risk and this one has a high risk. Now, what about the returns? For the money market fund, you can expect a return between 15 to 18% current yield. This thing can go up or still go down. And for the equity fund, you can expect a return from about, let's say, 30% to 60%. This is historical gains. Now, what about access? You can have access to your money here anytime. It is always good for this one to stay long term. And the money market fund is ideal for savings. It is better than your normal savings account, because let's say your normal savings account is paying you about 4% interest. This one is still paying a much more higher interest. So it is just a perfect place to put your emergency fund, because you have access to your money anytime and it also grows. But for the equity fund, it is for long-term goods. So if you want to invest in equity fund, it is for wealth building. It grows over a long period of time. Before we now go to the age-based investment advice, which one is the best? It all depends on you. It depends on your age, depends on your risk tolerance, and it depends on your investment goal. So now, let's talk about the age-based advice for this mutual fund. If you are in your 20s or you are in your 30s, which one should you do? Because you have time on your side, it is good you go for the equity fund. So for 20 and 30, equity fund is calling your name. because you have time. You have time to wait. You have time to hold the investment. You can handle ups and downs of the market because time will smooth out the risk for you. So you keep most of your money in the equity fund. Maybe about 70% of your money should be in equity fund if you are young. And the smaller portion, about 30% into the money market fund for emergency. If you are in your 40s or in your 50s, now this change everything completely. You are approaching retirement and need more balance. So a 50-50 will be the best ideal. That means 50% in equity and 50% in the money market fund. This way you still get some growth, but with protection from market swings. But if you are in your 60s or retired, now this one change everything again. Capital preservation becomes more important than high returns. So you stick mostly with the money market fund. Maybe 80% of your money should be in money market fund, or even 100%, because you don't have time for risk now. So it is about preserving your money, preserving your capital because of old age or because you are already retired. With money market fund, you will get steady income without worrying about losing value in a stock market crash. So my advice for you is this: you don't have to pick just one. You can also combine both. Use the money market fund for short-term goals and the equity fund for long-term growth. That is how smart investors balance safety and opportunity. So which Stanbic IBTC mutual fund do you prefer? Is it money market or equity fund? Drop your answer in the comments. If you find this video helpful, don't forget to like this video, share with a friend, and subscribe for more smart Nigerian investing guys. My name is Downsy, and I see you in the next video.